This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Alicia Robb of Next Wave Impact. Alicia, thank you for joining us.
Thanks for having me.
So what was your background before investing in early stage companies? What did you do before this?
Well, I like to call myself an accidental venture capitalist. I did not take the traditional route into early stage investing. I was actually an economist. So I am an economist by training. My PhD was actually looking at the role of race, gender, and discrimination in entrepreneurial performance. That got me into microfinance and small business financing, which led me to the Federal Reserve in the Greenspan days doing small business financing, research and policy. And then I ended up at the Kauffman Foundation for 12 years in research and policy around entrepreneurship and entrepreneurial finance. But I had really focused my research efforts around the gender and racial gaps in entrepreneurship, high growth entrepreneurship specifically, but then also looking at the racial and gender gaps on the investor side because they're very much related and they're even greater than the gaps on the investor side. So in the research that came out of my work for my last book, I had been researching why we don't see more women on the investor side of the equation. And with that research, I developed a learning by doing fund model, which I pitched to the Kauffman Foundation. And they said, great idea, but it'll take us 5 years to get through the lawyers. Just go do it, and we will fund the education and training piece. And so I did. I ran a pilot in the US with 99 women investors and another one in Europe with almost 99 investors. But that led me to really want to focus on impact companies, investing in companies that were solving real social problems. And that's when Next Wave Impact was born. And so our first fund has 99 women, 25 women of color, and we've done 13 investments so far. And we're about to be fully deployed in the first stage investments. So we're launching a new fund that will be focused on a sustainable planet and social justice.
Great. So what excites you right now?
Well, I think that a sustainable planet and a socially just planet. I'm really passionate about racial and gender equity, and I really want to see more women and people of color investing in this early stage ecosystem. I want to see more underrepresented entrepreneurs get funded, and I want to really rethink the models of early stage investing and get better structures of capital to entrepreneurs in ways that work for them and ways that offer the investors a financial return.
There's been a lot of discussion about diversity in the venture capital world. What kind of progress has been made so far, and what do you see coming up?
Not very much progress. About 2.7% of venture capital went to female CEOs last year. It's been pretty stagnant. I think about 1% each goes to founders that are Latino or Black. So there's a lot of work that needs to be done. And I think there's more and more awareness of the problem of having this lack of diversity and inclusion. So we're seeing more and more new entrants into this space with the specific theses of investing in women and people of color to really move the needle.
Great. So let's talk about your advice for investors. You work with them every day. For those that are investing in the impact sector, what do you advise that investor to do first before writing that check?
Well, I think for whether you're an impact investor or just a regular early stage investor, it's still the same advice. Part of the reason I started the pilot funds was because when I was doing the research and interviewing angel investors and venture capitalists, I was asking that same question of them. And the things that they advised were really helpful. And I had made mistakes early on in my first few early stage investments. And I thought, wouldn't it be great to not have everyone make the same mistakes we did, to learn from our experiences and start fresh? So, for example, a couple suggestions are don't invest in the first thing you see. Make sure you look at about 20 opportunities before you make your first investment. Another good one was don't look at an investment opportunity like a consumer wanting to get that product to market. Look at it from the investment side, which makes a lot of sense, but your default is really, oh my gosh, I love this product, service, whatever, I want to invest in it. But the investor hat you wear really is analyzing the investment opportunity, the potential returns, etc. I think for impact specifically, one thing that we look at in our fund is that the impact piece is really integral into the company and it's part of their DNA. So if they were acquired by someone who wasn't impact focused, that impact piece of who they were or are as a company would continue beyond that acquisition. But I think the best piece of advice is start slow and you have to build a portfolio. This is a risky asset class. And so the only way you're going to most likely increase the opportunity, the likelihood you make money is investing in a portfolio of companies. So making multiple investments and just not one or two.
So to go to the other side of that table, what's your advice for people running startups in the impact sector? What do you tell them to do before they launch that company?
Well, before they launch their company, well, I think by the time we look at them, it's more beyond the idea stage. So I think as folks are thinking about companies and starting companies, before you go to an investor, you really want to make sure that you have clear in your mind the market opportunity, who your competitors are, what differentiates you from the competition, and how you're going to scale the company.
Great. One of the issues I hear from investors is that impact deals are often at a lower return and they're trying to trade off financial return with social return. How do you justify those two or make those two meet in the middle?
I don't actually. We are a fund that is not offering or looking for concessional returns. We are looking for competitive financial returns for our investors. We want to be one more piece of evidence that you don't have to make those trade-offs when you're doing impact investing. Everything you do has an impact. Every investment you make has an impact. It could be positive or negative, but we don't think that there has to be a trade-off between financial returns and social impact. We see a lot of investable companies that are doing really good things, but they're also very profitable. If you think back to last year, and the best performing IPO was actually Beyond Meat, which is a plant-based alternative to burgers. And think about the environmental impact and the humane impact of getting animals out of the supply chain and not having that pollution of the factory farms and moving people to a healthier plant-based diet. That's an impact company, and that had huge returns for the early stage investors.
Well, let's talk more about the state of impact investing. How is the industry evolving? What changes do you see coming up in the next 5 years?
Well, I think it's finally caught on, and there's more and more attention being paid to it, in no small part due to the environmental problems that we're facing now with climate change and so forth. I think there is still some greenwashing going on and people jumping onto this bandwagon without really being authentically impact first investors. So I think it's important as investors to be really careful that you're investing in things that truly are impactful, and the entrepreneurs or the funds, if you're in public markets, aren't necessarily just greenwashing it to get your money. I think the field is developing, impact measurements are developing. It's still early stages, but I think as the field gets more structured and established, we're going to see better outcome measures and metrics that we can track to really gauge how impactful these investments are and how impactful the companies are.
Well, great. So let's talk about your fund and the investment thesis. What exactly is the investment thesis for this area, and what criteria do you look for in startups that fit it?
So Next Wave Impact is an early stage impact fund. We are looking for for-profit social impact ventures. We are industry agnostic, so we are trying to build a portfolio that's diversified across sector and geography. We typically try to stay away from companies in Silicon Valley, New York, and Boston, just because we feel the better investment opportunities are not in those three areas. So we try to invest in both underrepresented entrepreneurs and underrepresented geographies. In terms of traction, we are looking for companies that are beyond the idea stage, that do have some proof of product market fit. Now, that might be even something like a rewards-based crowdfunding campaign, paid pilots, or actual customers. So we're looking for companies that are not pre-revenue. And we've invested in everything from ed tech to stormwater to wastewater to solar to you name it. So we've, as I mentioned earlier on, we have 13 investments companies in our portfolio. We've made some follow-on investments of those initial 13. We're looking to make about 3 more first stage investments with our current fund and then save the rest of the funding for follow-on. But we're specifically looking to fill out our portfolio with a fintech company, a company around sustainable packaging, and something around health and wellness.
Great. Can you talk about 1 or 2 startups that you've already funded and how they're doing?
Sure. Our first investment in this fund was a company in Austin, Texas called Nepris, and it is focused on bringing real-world experts into the classroom, regardless of where these classrooms are. So a lot of the schools are in rural areas, primarily minority schools, and really trying to show how what they're learning in class today, how it's relevant to future careers. So bringing in different kinds of career paths to show how education is relevant and why things like studying English or math or algebra, can actually be used in a future career, and just to see what kind of opportunities are out there. So we made that first investment in the fall of 2017, and we just made a first follow-on with them a few months ago. So they've been scaling quite significantly and are in schools all over the country.
Great. Well, what are the challenges in the impact space for the startup? What do you think the startup is typically focused on as far as overcoming? Is it regulatory? Is it the market? Is it technology? Where do you see your startup spending their time getting up and running?
Usually it's the whole customer acquisition and building that revenue base and reoccurring revenue. I think that's first piece of getting established and getting that first market traction to build on is extremely challenging for early stage ventures. I think that's the key to really getting funding beyond that seed stage. So getting the right team in place. A lot of times, if there is a solo founder, they're using that seed round of funding to complement their skill sets and add team members that can help them scale the company. Sometimes if it is co-founders, they're still needing to hire additional talent to help them scale. So I think it's both building the team and then getting that market traction that are the challenges. Obviously, I'm not talking about the capital, but that's obviously a huge challenge for startups, getting that capital that's needed to really get that traction and establish a growing company. And I think especially for women and people of color, getting that financial capital, especially from early stage investors, can be even more challenging, which is why our investment thesis of our fund is really to invest in those. We see an opportunity there for great returns and a way to really have an impact.
Great. Well, you see a lot of sectors and applications in the impact space. If you had to pick 1 or 2 out that were good immediate opportunities for investors to pursue, which 1 or 2 would you call out?
Oh, I think our biggest challenge right now is our planet. So anything around a sustainable planet, whether it be clean tech, sustainable packaging, waste reduction, I think that is a huge area that's going to be incredibly important if we want to leave a planet that's inhabitable by the future generations.
Great. Well, I'm a big believer that climate change is going to be a big factor in the next decade, and we'll see a lot of resources shift over into it. As Venice goes underwater and Australia turns on fire, it starts to become a very real thing, and pretty soon money appears, and very shortly thereafter, venture capital appears. What's your prediction on how fast that's going to pick up with the VC community?
Very fast. I think we're already seeing it, and it's long overdue.
Better late than never. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Well, I think when I was talking about new models and so forth, one of the things I think we are seeing with these racial and gender disparities and the amount of capital going to underrepresented entrepreneurs is the way the venture capital market and models are structured. Most of the funding goes to these startups in these 3 geographic areas, when companies that have this, or say they have this hockey stick trajectory for growth and that they're going to be a unicorn. And I think the reality is there's a lot more zebra, gazelle type of companies out there that are scalable, that can be impactful, that can generate a lot of good jobs and a lot of great community benefits, as well as profits for investors. The typical venture capital investment is not going to be necessarily attractive to them. So thinking of new structures and ways to get capital to these kinds of companies. Some new innovations around this are revenue-based financing, where the entrepreneurs pay a percentage of their revenues over time until a return to investors is complete. Another one is flex equity or entrepreneurial redemptions, where they take investment for equity, but then they buy back that equity over time, either through a revenue share or through just basically a put option in the term sheet. After like 5 years, you buy it back at a certain return. So I think we need to think of new models and new structures and new ways of doing things that actually work for the entrepreneurs, as well as offer investors a return that reflects the risk of investing in this risky asset class. I think that the current models are broken, and the huge racial and gender disparities that we see reflect that.
Well, that's a good point. Many venture capital term sheets are geared toward huge exits by someone buying out the company. And there are several company types that just big companies are not going to buy for 10, 15x multiples, but they're still a good business. And so it's just a different way of structuring the capital to make them more attractive to investors. And that's a good point to see some of these new models come up. So in the last few minutes that we have here, how best for listeners to get back in touch with you?
Well, we're on the webs at nextwaveimpact.com. We're our Next Wave Network, or Alicia Robb on Twitter. And we're also on LinkedIn, so you can reach out any of those ways.
Great. We'll put those in the show notes. I want to thank you for joining us today. Hope to have you back for a follow-up soon.
Great. Thanks for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Alti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.